Hello everyone, welcome back to Upside Down Data. So in this video, I'm going to give you a critical level to watch on the price of Bitcoin that's based on a confluence of important indicators. So if you guys like the content, subscribe to the channel, give the video a like, and follow us on Twitter for regular updates about our content. So what I have up here first is the DXY. This is the US dollar chart. And as we talk about often, including last Thursday, this is always an important chart to watch when you're monitoring crypto or equities, any risk assets, because this tends to be inversely correlated with them. And as you can see, the DXY has been pumping over the past week, and accordingly, stocks and crypto have been pulling back. We last talked about this on Thursday, the 18th, right there at the kind of start of this sequence of three big candles to the upside. And what we've seen since then is that the DXY has revisited the level that it was at in the middle of July. And so far, it's gotten rejected off this 109.25 or so level after putting an impressive move into the upside. Now it's consolidating a little bit, and it's going to be really important for our expectations regarding crypto to see whether the DXY now pulls back or consolidates and then continues to the upside. It's been an uptrend for a long time. Uh, the low that it put in recently, earlier in August, still constitutes a higher low. So the uptrend on the DXY remains intact, and that suggests that there's definitely potential for more bearishness in the risk markets. Um, if we go over to the Bitcoin chart, we can see this alignment, right? So as the DXY was putting in these pumps over the past week, really since almost exactly at the same time that the Bitcoin pullback started, we've seen a series of red candles, culminating in this brutal Friday candle, which was 10% to the downside, the largest single day red candle that Bitcoin has put in since back in June. It was also the largest red day for equities since back in June. So altogether, it was a pretty bearish day for the markets. Now, the Bitcoin price is hanging around a really critical level here. And I want to identify that level for you guys so you know exactly what to watch and also explain to you why this level is so important. It's a confluence of two indicators that point to this level as being really important. And the first indicator is the realized price. This is a useful thing to be aware of, and you can get this information for free in several places, including Look into Bitcoin. And so I have the realized price chart up here. Realized price is the aggregate cost basis for all the coins in the market. That means that this is the average price at which all Bitcoin that are being held right now were bought. This is a really important level psychologically and as a predictor of market cycles. Typically, historically, when the realized price has, when Bitcoin's price has dipped below the realized price, that has been a quote unquote generational buying opportunity. That has been, just around the market cycle bottom, and buyers there were handsomely rewarded. We can see this every market cycle going back to 2012. We saw an extended period below the realized price back in 2015. We saw a dip down there in 2018. The COVID crash briefly brought the price again back down below the realized price in 2020. And now here we are again. After spending a little bit of time earlier, in June and July below the realized price, we've now dipped just below the realized price again. So this is bearish in the short term and also marks what has historically been a very opportune buying opportunity. So the realized price level right now is 21,710 as of yesterday. This will update a little bit later today. 21,710. The price of Bitcoin, as you can see, is 21,420. So the price is coming up against the realized price. And this is after hanging out above it for a bit and then losing that level, and is now trying to revisit it again from the downside. And so this is a battleground, this region, because this is going to be defended by the bears. This cost basis is going to be defended by the bears. And it's also going to be seen as a critical level for the bulls to try to punch through in order to preserve some modicum of bullishness. I mean, from a narrow perspective, we are still in an uptrend here since the middle of June. It's been a series of higher highs and higher lows, sometimes only marginally so, but an uptrend nonetheless on a technical basis. So this realized price level at again 21,710 is very important for determining the viability of this uptrend to continue, and generally to determine the sentiment in the market as a whole. So this is, as I said, a really important site of the bears and the bulls going at it. So this is one indicator that points to this 21,700 level as a really critical level to watch. There is another which draws on an entirely different source of information, and therefore, when we see this confluence, it's very compelling because these are identifying a similar level based on entirely different inputs, and that is our own market direction classifier. The market direction classifier, I'm going to get out of the way here to make sure that you can see clearly, is a machine learning model that we developed here, and it analyzes price action and attempts to identify levels that at which we should flip our bias from bearish to bullish or the other way around. So when we see green on the price, that indicates that the price is above what the market direction classifier considers to be a critical level, and therefore we should be expecting bullish continuation. But when it dips below that level, that's a sign to get out of the market because it indicates that the bias is then to the downside. And those are these red periods. It's a little bit hard to see because this just happened and we're just below the market direction classifier critical level here, but it has flipped red. We're just below this level now. So this is again confluent with the realized price. And the specific level on the market direction classifier is 21,794. So the realized price is 21,710. The market direction classifier critical level is 21,794. So this 21,700 to 800 level is showing confluent significance. As I mentioned, these are completely different sources of information. The realized price is a very macro indicator that typically is useful on a scale of market cycles. So we're talking about years here, and it takes into account the entire cost basis of the whole market. The market direction classifier is a much more dynamic model that's taking into account both long-term and short-term price action and identifying critical levels as a function of that price action. So there's no reason for these to track each other over the long term. And in fact, the realized price and the market direction classifier critical level are usually not aligned in anything like the degree to what we're seeing right now. Usually these things will vary independently, and so that makes it all the more impressive when we see them identifying the same or a similar level as really important to watch. So we're seeing both from the perspective of uh, you know the some on-chain data about where people are holding their cost bases in aggregate, and a price action metric, which is tracking the market in real time in a more dynamic way. And they're both converging on this level. So the point of this is watch this 21,700 to 800 level because this is really the line in the sand right now from a technical perspective. People are watching this because for many of us, this is the line between profit and loss. On average, this is the line that determines whether people are seeing red when they open their portfolios or green. And right now, people are seeing on average slightly red, and the market direction agrees with that. So if the price can reclaim this 21,800 level and show a daily close at that level, that would be an optimistic sign. Obviously, we need the macro conditions to participate in allowing that. We need the Fed to uh, make some more conciliatory noises. And there is a little bit of that coming out. There are still going to be some interest rate hikes, but they may be decreasing in magnitude over the coming months. So there's still a lot of uncertainty in the market, but there is, a reasonable possibility that we could be, coming up to a more stable period of time. And perhaps the Fed is going to take their foot off the gas when it comes to tightening, which would allow the markets to recover a bit more. It does not have to happen right away. Um, but as we wait patiently for this to happen and continue to treat this like the accumulation zone that it is, we want to be cognizant of these important levels. And right now, the level to watch is 21,700 to 800. So keep an eye on it. We'll keep you posted. as the market direction classifier continues to update its critical level, if the realized price uh, continues to change over time, but that's a pretty slow moving one. Anyway, hope you guys found this useful, and thanks for watching.